joined by Gary Boyson, who is at the Johannesburg Stock Exchange and joining us to unpack that market. He's from Rand Swiss. Gary, thank you so much for the time. 0.5% down, I suppose, today. Having seen the JSE come up for 4 weeks of good air, one would say that perhaps now it's time for a breather.
Yeah, I think we're getting international markets like the S&P 500 hitting all-time highs actually towards the end of last week. It did pull back slightly on Friday, but there seems to be a little bit of attention ahead of the G20 talks, a little bit of concern around what's happening in the Middle East certainly as well, and we are seeing the market just dip off a little bit as we see that kind of solid run that we've had in international markets just start to falter.
Yeah, and now of course the big theme will be that China-US trade talk, and it supersedes everything else that happens at the G20 summit, which is expected now over the next few days. There are always hopes that some sort of solution will be found. How much of it is really filtered into that market?
I don't think too much, is expected in terms of a de-escalation. I certainly think everyone is hoping for a de-escalation, but we haven't seen a proper move in the certainly not a selling off of the safe haven assets, and the equity returns that we've seen recently have been more probably based on the looser monetary policy and the Fed announcement from last week, which was almost in direct response to escalating trade tensions. There is, I think, the hope. Certainly, we've got some of the Chinese, the Chinese authorities coming out and saying that they believe that there should be more of a conciliatory tone to the talks that have now resumed. You remember the talks broke off last month after the US accused China of backpedaling on some of the agreed upon terms, and then what was really making headlines is the potential I suppose side meeting between President Xi and Donald Trump, and I think just the markets and market participants really hoping that a meeting of the two leaders could potentially just start the ball rolling to seeing some sort of de-escalation, if not an actual reduction in the tariffs that we've seen implemented so far.
Yeah, it's quite interesting as well then that President Xi Jinping heads to Japan for the first time since he was put into power in 2013, and he's going to try to find a way to as well build on those trade relations between himself and China. What does that sort of mean for the market? That you have to find other ways, perhaps other places for business? Is China looking for other options?
Certainly, I think China is looking for other options, but the fact remains that America is still the number one, the largest economy in the world, and China is number two. So, as much as you do obviously look for other avenues of trade and other economies to broaden your sales of products and try and import from other locations, the fact that these are the two largest economies in the world is always going to have an impact, and there's no getting around it if that's where you're going. But absolutely, I mean, we hope that we do see a settlement, because this is certainly impacting global growth. It's impacting the expectations for global growth, and it's one of the reasons that we're seeing more subdued markets internationally. Yeah.
Okay, let's very quickly talk about that Rand picture as well. It had improved slightly now, or falling off ever so slightly as well. What's your sense on that, though? Are we getting a sense that the Rand is perhaps struggling, or it will just trade within this range until we get a clearer picture on interest rates, those trade talks, or what might drive it?
So if you're looking at the local currency, certainly you have to split it into international and domestic factors. Internationally, absolutely, when you're looking at things like the trade talks, that's going to help to shift sentiment, and you're going to see the combination of risk on, risk off trade and that dichotomy playing out. And we are certainly seeing that. The correlation between asset classes has increased fairly dramatically. So you see the US markets falling, you'll see the European and Asian markets falling in tandem. You see a run into safe haven assets like US treasuries or gold. You see those lifting in tandem as well. So there's a factor that that kind of international scene will continue to buffet the local currency. But certainly domestic factors are also at play here. I mean, we've got obviously an economy that is in a very, very dire situation, and that seems to be limiting any significant rand strength. We had our local exchange reporting, or at least they weren't reporting, they came out with a trading statement today saying that they're looking at earnings potentially being down between 25 and 35%. Now, when you get an exchange profits falling, that's generally because of subdued economic activity. It's because of subdued trading. It's because of an investment climate in South Africa that is under a lot of pressure. And when you get investment, when you see a lack of investment coming from offshore, a lack of investment locally as well, it's very difficult to find economic growth. GDP is not going to tick up while we have no investment. And that's one of the concerns that certainly people are looking at when they're considering whether to buy or sell local currency, and that is definitely influencing the price of our local unit.
Yeah. Well, Gary, unfortunately, we have run out of time, but always a pleasure chatting to you. But thank you so much for that. 0.5% lower than for the JSE All Share this afternoon. Gary Boyson from Rand Swiss there, joining us live from the Johannesburg Stock Exchange. We're coming